All right, good evening, everybody. Let me turn up my mic, make sure you guys can hear me good. If you can hear me good, drop a 1 in the chat. If you can hear me good, drop a 1 in the chat. Okay, I'm looking, let's see who I got on here. Jay Do, I'm gonna make you an admin so you can let people in, or co-host, and Keisha. I see you guys on here since you run the Zoom sometime. How's everybody doing tonight? I have everybody muted for right now because I'm recording. Just to tell you guys the way I run things, just to keep it smooth for everybody. I teach for a while, then I pause and answer questions. So if you have any questions, you can type them out in the chat, or you can, when we get to the point where we start unmuting people, we'll do that. So tonight, what I plan on doing, I'm going to take a look at some charts, and I want to show you basic market structure and how you can use Criss Cross to confirm your entries. Okay. Wow, tonight is Thursday, right? So it's Thursday night. So I got to get used to my screen, guys. Whenever I teach, some of you already know I have like this big curved screen, and I have to like minimize it to make it readable by you guys. All right. So I'm gonna take a chart and mark it up from scratch. Somebody drop me a chart in the chat. What chart you guys want to see? First one I see, I will mark it up. UJ. All right, USD JPY, I can tell you already it's on an uptrend. I was in a swing trade for about 3 weeks. And I closed it when it got right here. So I'm sort of mad at myself because it looks like it's going to break on through and go to my other POI that I had. So yeah, I'm sort of mad. I had got in and held it for a few weeks when it got here and rejected last week. You see, these are weekly candles. So when it got there last week and rejected, I closed my trade. I probably could have held it. Looks like it's going to break on through, but I'm going to mark it up from scratch. So I'm going to clear everything. So this is going to give some of you new people the basics of market structure, which I'll teach a basic of market structure pretty soon in the future. And when I do the boot camp for the golds, the first, I'm going to do 2 different sessions. I'll do one day, which 2 hours, focusing on market structure, because without market structure, you cannot effectively trade. And the next thing I'll do on the next 2-hour session is incorporate that with some smart money or / institutional trading. Okay, we look at every single time frame because we want to know what the market is doing overall. So your monthly is sort of like an aerial view. So just think of this is the whole market. And when you're looking at the monthly, it's like you're on an airplane on an aerial view. You can survey everything that's happening. You can tell everything from the past all the way up to current price, which helps you predict where future price is going. So just think of the monthly as an aerial view, like you're flying above, just like you guys, when you fly, you can see everything, every layout of the land while you're up there on the plane. However, you can't see the intricate details. So as we go down to the lower time frames, we're getting into the intricate details. So your monthly is your aerial view. Your weekly is now you're starting to come in for landing. The plane's coming down, so you start to be able to see shapes, cars, and houses, but you still can't see what's going on down on the ground. So when you get down to your daily, now you can start seeing just smaller things like people. And then as you get down to the lower time frame, now it's like your boots on ground. You can walk around and you can maneuver. But when you get to this lower time frame and you're walking around maneuvering yourself, it's like you're in the airport walking around. You don't know where you are until you get to the next corner and you have to turn. It's sort of like being in a maze. You don't know where you're going because you don't have that overall aerial view. If you've ever seen a maze, like when you're down on the ground of the maze, all you see is what's immediately beside you, behind you, in front of you. But when you're on that aerial view, you can actually see the outline of the maze. So we're going to start at the top from the monthly. And just looking at the monthly, somebody in the chat tell me what you think the monthly is doing on UJ. What do you guys think the monthly UJ is doing on the monthly? Somebody said selling, somebody said pullback, somebody said correction. So I'll tell you what, I'm gonna go ahead. Hey, Justin, you can go ahead and you and Keisha unmute people so they can answer. But like if anybody has any background noise, you can unmute them. So we know that the market gives us impulsive moves, which is like a straight up move. And this is like a big impulsive move. And on the monthly, you can tell it's been making a flag. Okay. Everything gives you see at a small impulse and a flag, impulse and a flag, impulse and a flag, which is happening probably on your weekly and your daily. But here on the monthly, this is like one big impulse. This is not a flag. This is just a little bit of consolidation, but you got the impulsive move and the flag. Now, one thing you'll notice when you see these areas of consolidation, the market gets there and reacts. So the market didn't get here and just pause for any reason. It came here and paused and reacted because it got here, went up, got here, went up, got here, and went up again, okay? So on our monthly, we have a big impulsive move, which is making a flag. But the only thing I'm concerned with when you're looking at your time frames, it's like you're standing here and you're looking back that direction. Okay, so I asked myself, where did the market make U-turns? It made a U-turn here, started going up. Made a U-turn here and started going down. Made a U-turn here and started going up, but it didn't make a higher high. So this is our current trading range. This is the last time the market pushed up, and that's the last time it pushed down, because it pushed up here, but it didn't break this high. It pushed down here and made a low. So I'm going to focus on what's going inside this trading range right here, because the market has to get here to go higher and it has to break through here to go lower. So I'm not worried about all that. A lot of times people, they'll say, well, how far back do I go? It doesn't matter how far back. It's the high and the low that matters. Even if it had been here, even if it had been here, I don't care if it was 2 weeks ago, 2 months ago, 2 years ago. It's the high and the low that is supposed to catch your attention, because this is when they wanted to push it down. This is when they wanted to push it up. Really, this is your high and this is your low. But since it has so far to go here, I'm going to consolidate price and box it in to this trading range, because I can already tell, even though my monthly, that this is an impulse and this is a flag. When I go down to my weekly, I have an impulse and a flag, and I'm getting a continuation. See, you'll get so used to looking at the market, you'll know what it's doing on the next time frame before you even get there. So to box in my monthly, I can go here to that wick. Why do I not go through the wick? Because on the lower time frame, that wick is all candle body. And I'm going to go right here. My mouse will cooperate with me. And voila. On my monthly, that's all I need. Nice, simple, and clean. I know that the market pushed up here, pushed down here, and it's trading in this range. All right. Going to my weekly. As we stated, we had this big impulsive move and a flag that was coming down. This is still the impulse. Why? Because this is your low. Your low was never broken. So that was just the impulse and a flag. And guess what? It happened inside of the monthly impulse and flag. So sometimes you'll see structure inside of structure. So the weekly made an impulse and flag inside the flag of the monthly. All right. So that making sense to everybody? All right, so on the weekly, the only thing we're going to be concerned about is the current trend. All right. Now, one of our favorite patterns is like descending and ascending channels. When price is coming down choppy, that's a channel. If the channel is coming down, I know the market is more than likely going to be aggressive going to the upside. See here, the channel was going up and it broke to the downside. The channel was going up, broke to the downside. Channel going up, broke to the downside. Quick reversal, channel down, now going to the upside. All right, so within my weekly, the only thing I want to focus on is the current trend. All right. Does anybody see a trend going on inside this weekly? Someone tell me, is there a trend going on inside the weekly? Okay. So here's your low, here's your high, and market is consolidating down. So there's really no trend on the weekly. To have a trend, you would have to have a low, a high, a higher low, and a higher high. So you could draw your trend line. So really on the weekly, you had an impulse, and then this has been consolidating for like 5 years, and now it's finally giving us a breakout to the upside. So the weekly doesn't really have a trend. However, it does have specific price points or POIs that we can focus on. So right here on this, we had the candle that got engulfed. And if you box that in right there and include the wick, you see how price reacted to it. The first time it bounced off of it again. So let me draw that out. This candle got engulfed. That's your institutional candle. That's where the buyers came into the market. It hit it, respected it, hit it, respected it, hit it, respected it. Now it came and did what we call mitigation. When you start trading smart money or institutional, you'll hear about that. It shot it up again. So then you got that descending channel. There's probably an institutional candle on a lower time frame. It hit that and reacted. So there's really no trend on the weekly. You just had consolidation since, let me see the exact date, December 2016. This thing started consolidating down. There really was no trend. There was actually a flag on your weekly. So just to give you a visual, I won't do this when I actually mark it up, but just to give you guys a visual, there's no trend. There's consolidation. Does that make sense to everybody? Okay, Priscilla, do you see anywhere in here where I could have drawn a trend line? A trend has to have an impulsive move, a pullback, and another impulsive move. You got an impulsive move and you got a pullback. You don't have an impulsive move yet. It's all consolidation. That's why this pair has been hard to trade. But if you know that the impulse is to the upside, then we know that our biggest moves are going to be our buys. That's going to be our aggressive moves. That's why when it's buying up aggressively. That's why when I bought, I knew that I could get it to at least here. But it looks like it's going to keep breaking through that and then go on to the next. You got all these equal highs here, but price didn't hit it and reject like it did here and fall down. So in a way, like I said, I wish I had held those buys, but I'll take this off. I had just put that there to give you a visual. All right. So this was a weekly institutional candle in case you don't see it. There it is right there. It's the candle that got engulfed, and we do include the wicks because wicks are candles on a lower time frame. All right, and I won't leave that there. I just wanted you guys to see it so you could see how price reacted to it and how it was holding price up. This was your impulse. Price never broke below the impulse, which means structure didn't break, and it's still in an overall buy. So going down to our daily, now we see an actual trend. What kind of trend do we have? We got an uptrend. All right, so we can draw a trend line. 2 touches make a valid trend line, 3 touches make a valid trend. So now we see our favorite thing. A trending market is the most money you will ever make. Easiest money you will ever make is a trending market. A consolidating market will confuse you and take your money. So we got our impulse, correction, continuation, correction, continuation, correction. On a lower time frame, there's a little correction maybe on your 4-hour, but it's not pertinent to this. Now we're getting a correction, and guess where it happened? At a candle that got engulfed, which would be your POI for your daily. So whenever I bought this a few weeks ago, I knew that I could hold it to here because the market doesn't turn around in the middle of nowhere for no reason. So I can mark now my daily POI. And you see this came from the weekly all the way up to the daily. Again, if you get in on a trade, there's specific areas you can hold it to without ever letting it go. I'm going to bring this down here on the daily. This would be my zone. This candle was the last one that got engulfed, actually, this little pink one. But again, we do not disregard wicks. I just wanted to clean that up. So now on our daily, we have gotten to a higher time frame POI. It's leaning out right now. We don't know. This is an untradeable pair according to the daily. We don't know if it's going to flag and keep on going up or if it's going to reject and then sell. So based on where it is, you do not buy when it's at an all-time high. Like right now on the daily, it's at a high from back in, let's see where that's from. This is back from June of 2020. The last time it was here, it went on a huge sell. Even though it was choppy, it went down. We're there again, okay? So we can't just assume it's going to go up. We can't assume it's going to go down. So I just want to make a note of myself here. This is my daily. All right. Now, going to my 4-hour, I can see price keeps trying to come up here and break. Now we got that consolidation again. So on the 4-hour, we got an impulse and we got consolidation. This consolidation could sell off or it could push higher. We don't guess, we wait. So that's UJ. You see here it leaned out and sold off, but we don't know what it's going to do this time. So we're waiting for it to make up its mind. If it gives us a break of structure, which makes a low and then a retest, then we could sell it. But then we would start looking in this area to like a candle that got engulfed to see if it's going to break or bounce. All right. Does that make sense? All right. So now let's back test this with Criss Cross and see how we could have gotten in. So what you do on Criss Cross, you mark up your charts like you always do. And what I do is I go to my daily zones and I look for my POIs, point of interest. All right, so let's just say right here, we have a candle that got engulfed, okay? So let's box that in. And that's going to be an area I'm going to look for buys within this box because price took off and gave me an engulfing candle. Now to back test it, I am going to cut price off here and see where we could have gotten into this. We know price is making impulse correction, continuation correction, but we don't trade off the daily, but we do find our zones on the daily. So going down to the 4-hour, we see price consolidating sideways. Now, looking left, what do we see? Engulfing zone, okay? So price wasn't just sitting there doing this for no reason. It was doing it because we had an institutional level or POI right there from the last time. Remember, I told you when price gets to these, they will react. So we know we got a hot zone. Let's just call that a hot zone. Going to the 4-hour sideways consolidation, can't trade it. 1 hour, voila. Now, inside of that candle that got engulfed on the daily, what do we see on our 1 hour? Anybody? What do you see inside that red box? Right. Okay. An engulfing zone. So we had what causes a candle to get engulfed? An impulse. An impulse leaves a candle that got engulfed. Okay. So now I got a 1 hour candle. That gave us an impulse, a correction, and here's your continuation. All right. So when price pulled back into this, let's see how far that is. Remember, we don't take a trade until it pulls back at least 50% or more. So let's see how much it had pulled back. If I can get my Fibonacci to work. Right there. And bring this in right there. So this pulled down into like between your 61.8 and your 70. And you could have set a pending there, like at this engulfing zone, and you could have gotten in this trade and held it for several weeks. All right, so looking at our 15-minute, doesn't this look just like the weekly did on the higher time frame? You had an impulse, huge flag, and then price finally broke out. The price does the exact same thing on every single time frame. The 1 minute looks just like the monthly and so forth. If you didn't see the time frames at the top, you wouldn't know unless you had studied the chart and knew where you were. So here inside the 15-minute, we see we got an impulse and a correction. What do we see right here? We saw a descending channel, which is our favorite pattern. When price breaks out of that descending channel and pulls back into it, you can start looking for entries. All right. So if we were using the Criss Cross, which is the 9 and the 50 and the MACD, here was the first break. If you wait until the second one, which is your retest, so we get our break right here and our retest. If you will wait for the retest, you'll have a better, cleaner entry. All right, some of you like using it on a higher time frame. 30 minutes, same thing. And 1 hour, it didn't happen until way here. Now, the way I am able to use it on the 15-minute is because I know how to identify these key zones. So if I wait for it to come into a key zone, give me an impulse and a correction, then I can catch the continuation. So now let's see where our entry would have been. Let's put right here. Right, turn off Criss Cross. And let's jump on our 1 hour and see how our trade played out. All right, so does that make sense to everybody so far? All right, anybody, I'm gonna pause here before we do another example. Anybody got any questions? If you want to unmute, just raise your hand and one of the hosts can unmute you. And nobody needs to unmute. If you want to unmute, let us know. Oh, so everybody's good? All righty. So now let's look at another pair. So Sabine says when the 9 and 50 cross is where you would enter, okay? Let's go back to that 15-minute. Let's look at our confirmations, okay? On the daily, let me hide everything. On the daily, I had a candle that had got engulfed. That was my first confirmation. I knew I was in an uptrend. I came to a zone, there was a candle over here that had got engulfed. So I knew that was my impulse and my correction. It had pulled back between 62 to 70%, and I was looking for the continuation. So let me chop it off again. Sure, I am unmuted. So we knew on our weekly we were in an uptrend. The daily had given us an impulse, correction, a continuation. So we were looking for the next continuation because we know we're typically on a trend going to get at least 3 of these. Okay. So this was our first impulse correction, continuation correction. We're looking for our third push, our next push. Also, looking at my higher time frame, I know where I anticipate this going. Price doesn't stop in the middle of nowhere. And I have a candle that got engulfed on the daily. So 9 out of 10, price is going to go up there if it's on an uptrend or a bull run. All right. I'll go down to my 4-hour and I see I'm here at an engulfing zone, institutional level, POI, whatever you want to call it. We can actually tighten that up a little bit. And this is where I expect to get some type of reaction in price. Now, but if I go to the 1-hour, it'll be even cleaner. Yep. See, we got that consolidation going on in there. And what happened on our 1-hour? We got an impulse correction, and we have a candle that got engulfed. I don't enter off the 1-hour. I go to my 15-minute, turn on my Criss Cross. Okay, let's look at this one. I don't take the first one. I wait till the second one right here. Let's turn this one on, it's cleaner. All right. The first one is my impulse. So if I get in the impulse right here, yeah, it gave me 26 pips, but it pulled all the way back. If I wait for my second one, when I get in it, price never pulls back. Okay. And the fib is no different than like the regular fib that we show, Vivian. Just the only thing I use the fib for, which you'll get to where you won't need it, is when you get an impulse, you want the market to pull back at least 50% off. Anything below 50%, you can start looking for its signs of an entry to take a buy. You just want the impulse to pull back at least 50% before you get your continuation. All right, so that's how I would have used the 15-minute, because the first one gives me my impulse and then there's a correction. So let's see if I can see another example, but I don't get it on the first cross. I wait till the second cross. Was it EJ? See here on EJ, when we got that first cross, you see how we got like there's 20 something pips, but then when that second one came, we got a bigger move. It's getting ready to cross again. This pair is really getting on my nerves right now. We had, this came into a higher time frame zone. It gave us an impulse, a correction, a continuation, but you see it's sort of like creating equal highs. So this is consolidating. Anything that's consolidating is hard to trade because it can just bounce around and you never know if it's going to break up or if it's going to break down. It could do either or. And honestly, the higher time frame is a sell for this still, I think. So It's making a flag on the daily, which is why it's bouncing around in that channel. You got this and it's doing this. So it could do that one more time and then go up. All right, let me see what the next pair was. Somebody said they wanted to go over. Scrolling up trying to find the pair. I see. I got EJ. So somebody did say EJ, then GN. So let's do EJ. All right, EJ. I'm not going to take off everything since we had that trade on there for this week. EJ, as you see on the monthly, I did the exact same thing. I put this at my low and I got one at my high. The only thing I did different, I saw I had an engulfing candle there. So I know price can buy all the way up there. And that's another reason I was looking for that buy, hoping it would finally break out. On the weekly, we did the exact same thing. We got a nice clean uptrend. So I was trying to catch that breakout to the upside early. I still think it's going to break up to the upside, but I can tell on my daily, see, this is my weekly trend, but we know everything is impulse, correction, continuation. It's making a correction for my daily. All right, so if I go down to my daily, I can see price making this correction. It probably shows better on a 4-hour. There you go. So all I was trying to do was catch this as it's breaking out, but it didn't break aggressively. And I still have this zone right here. You see right here on the 4-hour, got an engulfing, right? Right here. You see price getting to that engulfing and it's trying to break out. But on this time frame, we got impulse correction, continuation, correction. So it could give me a sell down here. But since we're in an overall buy, I'm going to take the buy opportunities in case it's the one that ends up giving me a break to the upside. It's clearly not ready because we got impulse correction, continuation correction. Remember, we typically get 3 pushes, so we could get one more down. But you can catch some quick pips when you're trying to catch it to the buy side because that could be the one that eventually breaks up. So let me see why I have this highlighted. It must be on the lower time frame, like the 1 hour, and engulfing or something in there. But do you guys understand why EJ is consolidating sideways after going through this? You determine what time frame the flag is for by actually looking at that time frame and seeing it. But I'm used to seeing it in advance and seeing it on different time frames, so I can usually tell, like looking at a pattern on a higher time frame, what it's doing on the lower. So yeah, we have some consolidation here. It must be like a, yeah, there's one right there, 15 minutes, right there. So that would be, if this sells off again, that's where I expect it to come down to. It's trying to break out, but it doesn't look like it's going to. It's probably going to make like a flag, get back up here, and then sell back down. But so that's EJ. EJ keeps trying to break out, but there's still liquidity down here, and it's still on a downtrend on the lower time frame. Like this is the 1 hour. The 1 hour is still on a downtrend. Why is the 1 hour on? Somebody tell me how we know the 1 hour is on a downtrend, even though looking at our daily, it is a clear uptrend. But looking at our 4 hour and our 1 hour, it's selling. Okay. How do we know that it's selling on the 1 hour? What's our indication that it's selling? Anybody? Yeah, it broke structure. So We had a low, high, higher low, higher high, higher low, higher high, structure broke. So we had a lower low, lower high, lower low. It hasn't made a lower high yet because it would have to break this. So it's just making a flag. So that's why we got such a small move on it. All right. So up here, we could have been looking to sell after we saw that break and retest. So let's look at that. All right. First, we had an ascending channel, an impulse, a correction that came into the candle that got engulfed. All right, so let's turn on our crisscross and see how we could have gotten that. All right, right here, you see the first entry didn't play out. The second one right there with cross did. So this was your break and your retest. Okay, you could have drawn a trend line on your ascending channel, broke the trend line, you got an engulfing right in here. I hate my new mouse, guys. All right, right in there. It broke, retest, crisscross came in, and the first drop on crisscross went 135 pips. Got a pullback, got your second impulse correction, another crisscross entry, 142 pips. Here, now price is consolidating. When you get to a zone, like there was an engulfing on the larger time frame, and you've had a big sell-off, expect some consolidation. Looking at this, you know, it's trying to break up, but I know what price is doing, so I'm not going to buy into it again because price is correcting like this. I would have to see certain price on the lower time frame to go in for a buy again. All right. So what was the other one? When I said GN, was the other one GN? So that's basically what I do. I only use crisscross at certain POIs. It has to be on like a zone where there's a 4-hour engulfing zone. Because price doesn't just turn around in the middle of nowhere for no reason. I think somebody said GN. All right. Do I have this marked up? All right, so let's mark it up. It's real choppy, but we'll mark it up. All right, on our monthly, what is price doing? Anybody? Oh, so our monthly gave us an impulse, and it's making a flag. So the bottom we can buy, the top we can sell. Bottom we can buy, top we can sell. Bottom we can buy. But just keep in the back of your mind that the overall trend is down. So the sales are going to be the predominant structure you're looking for. All right. So these you have to trade a little bit different when they're making a consolidation on the monthly. You have to look at the most recent, like even though this is a flag pattern, you have to keep that in the back of your mind. Because look where it came here, this the candle that got engulfed, guys. Look how it reacted to that. Just imagine if you had sold that, boom, it dropped straight down because the sell is the aggressive move. The sells are going to give you the money faster. You see when it's buying up, it's consolidating. So I'm going to look, because I know that I'm in a channel. If you want to draw that channel, you can. I'm going to show it to you both ways, and you decide which is visually better for you. You can do that. But always look at the last time price pushed up and the last time price pushed down. and that's your trading range. The price is trading between this high and this low, right? On my weekly, again, you see, just like UJ was the opposite because it was flagging down, you couldn't find a trend. Now this is flagging up, so you can't find a trend. So you just have to keep in mind that it's inside this channel and its price is making higher highs and higher lows, but it's because it's making a corrective channel for this impulse right here. So price could go up again and break. I don't anticipate it to come up here unless it comes, because there's a lot of liquidity left inside that wick. So no trend on the weekly. I love having a good strong weekly trend, but we're not going to get one here. On the daily, you're seeing a semblance of a trend, but again, it's choppy because it's in a corrective pattern. If you want to put a trend line on there, you can. Just stretch price out to where you can get a good clean move. All right, so we can see a strong impulse. Now, here you had an engulfing zone, but price didn't reject off of it. Price looks like it's going to push through it. Now, a lot of people got here and automatically started looking to sell GM, right? Where's Randy? Let me pick on him. I think it was Randy dropped the charts that he was looking for. Randy, was it you? Go ahead on you. Let me pick on you. Was it you said looking to sell this, or Justin? Somebody did. Oh, it was Justin. Justin Lowry. Let me pick on you. You said you were looking to sell GN. Okay. You were probably looking to sell GN because you were looking at your daily. And you see impulse, correction, continuation, correction. But backing out of your daily and looking at your weekly, you're in a channel. You just got a bullish engulfing, okay? On your weekly, you got a bullish engulfing, which left us a zone right down here. So if I were going to sell, it would just be for a flag, but you got to keep in mind that your higher time frame is telling you that price is going to go up, okay? Well, look at that. That making sense? Justin's not on here, so I can't pick on him. That's my buddy. I pick on him a lot. But is that the person asked about GN? Does that help you understand what it's doing? Okay, Matthew. So you see, even though it's choppy, it's inside of a higher time frame channel. So it finally gave us an aggressive push. We got an impulse correction and a continuation happening now. Looking at this, I can already see we had a descending channel on the lower time frame right here. Look, we had an engulfing. Price came into it, descending channel, impulse correction, continuation, correction, continuation. All right, so right here, when you saw this, you should have been looking to re-enter for the next continuation. Look, engulfing candle, bounced and went up, okay? So let's look at this on the 15-minute. And look at that. Boom. All right, the first cross happened. And a lot of times I take these because I see that descending channel. And I know with GBP pairs that first push will give you a lot of money. So price came down into a zone that I had marked on a higher time frame, gave me a descending channel, gave me a crisscross, and I could have gotten 274 pips, okay? Now let's play it forward and see when we look at this 1 hour, our indication that this price is going to buy up. Was it the 1 hour that had engulfing? There's one right there on the 2 hour, 4 hour. All right, so now because we got that big impulse and correction, I can make a zone and look for my second entry for Criss Cross and see what we get. I'm looking for price to come into this pink zone. Let's see if it does. All right, it didn't, but we got another entry here with the continuation. All right. Let's see. There you go. Had an impulse, correction. I think price eventually comes back down in there. Let me see. Let me let it keep playing. Right here, you had a flag, and with the flag, it broke out again. Give you a second move. 201 pips. Yeah, here comes my retest, I think. All right, so price made a low, a high, higher low, higher high. All right, there's another entry. And that's basically it. Let me see if I can go back to my zone now. There we go. Oh, here's where it came and retested. I know it eventually came back down. So after you got all these, like here would have been your first entry. This went 503 pips. All right, why did it stop here? Because on the higher time frame, if I can get my horizontal, go to 4 hour. Right here. This is reacting off of that zone. I forgot where I was at. I should have marked it. All right, here we go. Right here is what I wanted to mark. Let me mark it and then do that again. Because you're going to look for engulfings on your higher time frame for your take profit. All right, need that. 4 hour naked. Okay, now you see where this hit and rejected? If you look left, you had an engulfing candle. So that would have been an area that I would have set a take profit. And voila, there you go. So engulfing, it rejected. So back down, it gave you another entry. This time it broke through, give a flag on a higher time frame, broke out again. And that brings us to the next area where we have an engulfing candle. Right there. Check that out. Right there, got an engulfing. I think it's a daily one. Yep, came to a daily engulfing. All right, so that's why price has hesitated. I'm pretty sure now it's going to break and go to this one, because that's the next one that hadn't been tapped into. All right, it taps into them on its way up. All right, now let's time that. Dang, that hour went by fast. That's the exit strategy. The price doesn't just exit anywhere. It goes to the previous highs or the previous lows. You don't just get out of a trade in the middle of anywhere. You look at previous highs or previous lows unless structure starts telling you to get out. Unless you have a trading plan where you only get so many pips or so much ROI. Me, I trade off the higher time frame. Like this is the daily. I would have held it at least until there, taking partial profits. But looking at my weekly, just look at your weekly. Just got a weekly engulfing. Tomorrow's going to close with the weekly engulfing candle, okay? Which means next week, just look for a flag. Because it was aggressive all week, probably get a flag on next week and maybe Thursday. Start looking for that continuation to the upside. Now, let's go back to the 15-minute. Let's turn on our 9 to 15 and let's switch to wrinkles. All right. So wrinkles, I like to take these on the 5-minute. So on the wrinkles, if you had got in that same zone, you got a good clean push here. It went up 350 pips. Got that next push here. It went up 123 pips. Down here on wrinkles, you got that same entry. Went up about 500 pips. So the difference between the Criss Cross on the wrinkles usually works better for a trending market because you get swing trades. Just like right here where it crossed under and it was consolidating. It wasn't a good trade, but here when you finally got a trend and it stayed, you could have got 1,378 pips here when it was trending. So everything works better with a trending market. A sideways market is rough, but here you could have got 1,000 pips. That's just giving you confirmation. You're going to enter on the lower, but the higher is going to tell you how long to hold it. 800 pips in here because you got an impulse correction continuation. You'd have been up 609 pips. So I want you to look at this, how choppy that is versus like UJ, which is trending. So if you can find something that's trending, stick to the trending market. Now look at UJ. We had this descending channel. It crossed, gave us an impulse correction. All right. And once it did, price never came back under 540 pips. Nice, good, clean swing trade. You can see the impulse correction, continuation correction, correction, continuation, consolidation. Criss Cross isn't really a strategy, it's just an entry confirmation. I trade market structure. And Criss Cross is what I used when I was like making my first, like when I had my first $10,000 month, I was using Criss Cross. And that's when I started teaching it. So you use the same rules you do with market structure, but the Criss Cross is just to confirm your entry and to only use it at a higher time frame POI. So let's just say let's do it on wrinkles. All right, on wrinkles. You can go to your 4-hour and draw your zones. You see up here on wrinkles, I would take that last pink candle brick, and that would be the area where I would expect price to go. So I would have held my buy up to there. Like here was our impulse that we saw earlier. This has been your flag. It came back into that zone. This was a big descending channel and then broke out. There you go. This is that weekly impulse correction. And now we're getting that continuation. It's just easier to see on Rincos. There's your daily Rincos. Looks exactly like your weekly candles. All right. Anybody got any questions before we call it a night? Hopefully this helps some of you. We'll do it again later. Justin's been tied up with military duty and hadn't been able to help us. But he'll be back teaching as soon as he can.
Go ahead, Bobby. Ask your question.
No questions? Bob, you good?
I cannot unmute him.
Let me
I got it. I'm unmuted. You hear me?
mm-hmm. Yep.
Okay. My question is, so your entry is based off a higher time frame engulfing zone, like a 4-hour or a daily, and then within that engulfing zone, you have another engulf. You go down to the hour, and when you get that engulfing, and you wait to it back to that same exact zone, then you take your entry there.
Yeah.
Okay.
Let's see. Jay says, when you start doing markups on Sunday, what do you look for when you're deciding what pairs you want to trade for the week? I look for pairs that have come to one of those POIs, and I'm expecting a reaction. If price is consolidating or choppy or in the middle of nowhere, it's untradeable. I just look for something that's coming to an important POI, like a daily zone or a 4-hour zone. Anybody else? Just remember, guys, market structure tells you what the market is doing, whether it's an uptrend, whether it's in a downtrend, or whether it's going sideways, okay? The higher time frame POIs tell you where to expect reactions in the market. Okay, so if it's going up and like that, then you would look left and look for a candle that got engulfed. If it's going down, you're going to look left and look for a candle that got engulfed. If it's going sideways, usually up there in that impulse, somewhere there's a candle that got engulfed. That's all. That's right there is your market structure. The candle that got engulfed is your smart money. Expect a reaction. Too easy. That's 90% of trading right there.
Another question. So on that impulse and that correction move, as it goes back to the higher time frame engulfing from the top, there's other engulfings that would cause it to have a reaction and go back down. That's why you kind of get that channel, correct?
Okay. So I'm gonna let you answer that question, and don't feel bad. This is how I do everybody. Let's see, on UJ, what do I have down here on the monthly?
Yeah, engulfing.
Right. Okay. What did price do when it came into that engulfing right here?
Yeah, another engulf.
It started buying up, right? And when it started buying up, what did it stop at here on the daily?
It stopped at the engulfing.
Exactly.
No, but I'm talking as it you see how it corrected on the smaller time frames. So I guess if you look left,
it reacts to all of them. Anytime
okay,
you see those consolidation zones, price has a hard time breaking through consolidation. Unless there's news, it's going to be choppy when it comes to a choppy zone. Just like I was telling you guys on EJ. EJ, when we got into that buy, that was EJ, right? Yeah, let me go to my lower time frame. When we got into that buy, it broke out. When it got to the choppy, what did it do? It got stuck. So it came down, tried again, got there again, and got stuck. It's having a hard time breaking through that. Those are orders, it's consolidation. It takes news usually to break through those, or somebody to throw in a lot of liquidity. Right now, it's choppy. Is there any news? A lot of times you'll see news come and push price through those. So. Some Euro news tomorrow. It's either going to break it, or it'll probably, if there's news coming up, the market will be choppy. So it'll probably like push up tonight and get there or there, and then that news then go boom. Because it's in an overall uptrend, but it hasn't finished that flag. So this will probably like creep up, and then that news will either could slam it up there to hit that and then come down again. There's an engulfing there, consolidation there. There's liquidity there, there's liquidity there. So the price is either going to, news is going to either push it there or push it on back down here. All right, that's it. I'll drop the recording tonight or tomorrow. You guys have a good evening, and thank you for jumping on.
Thank you.
You're welcome.
Thanks.
Thank you.
Thank you. Appreciate it.
Mm-hmm.
Thank you.
Thank you.